Happy Monday. This is this week's real estate and mortgage rate update. We'll jump right in. Kind of a crazy lead up to this week. So 30-year fixed rate mortgage, 6.84 as of today. This is the national average, moving downward slightly, and I'll jump into why that's occurring. So as I've mentioned before, this is mortgage-backed security. This is the bond that dictates mortgage rates. Green and up is good for rates. Red and down is bad for rates. You can see we're trending kind of in the right direction here. Now, the 18th of last week was the Fed rate decision. Jay Powell stayed pat, although Fed members, there's a consensus that there's going to be 2 cuts this year. Keep in mind, those cuts are for the Fed funds rate. Those don't directly impact mortgage rates. They do impact things like car loans, credit cards, lines of credit, things that, consumer spending. What the Fed has been trying to do, and I think that there's been some success, is keeping a lid on inflation. The PCE, which is personal consumption expenditure, kind of the Fed's favored method of measuring inflation, is down to 2.5%. They really want it to be at 2%. There's a bit of a tug of war going on right now with the current administration wanting to kind of loosen up rates to get more activity going. We'll see how that works out. Now, the big concern was yesterday. The current administration kind of sent out the mission to bomb the Iran nuclear facility. And the concern being a couple things. As I've mentioned before, the teeter-totter. So stocks, when they do well, that kind of hurts mortgage rates. The flip side of that is when there's uncertainty in the world, oftentimes money will get pulled out of equities and into the safety of bonds while, some of those things kind of work themselves out. And so we did see a run-up today earlier, but it's pulled back some because the retaliation that Iran kind of deployed this morning turned out to be kind of just a little political theater. They broadcast that they were going to do it. There wasn't any injuries or destruction of any kind. And so now there's talks of peace between Israel and Iran. That's all going to bode well for stocks, not as much for mortgages. And one thing of concern that showed up was the concern that Iran was going to close down the Strait of Hormuz, which 20% of the world's oil passes through there on a daily basis. When you look at oil and the price of oil, and what happens when we start to see increasing cost in oil, that's a pretty strong inflationary pressure. Bonds hate inflation, and that therefore that hurts mortgages. This is where Israel bombed Iran, back earlier this month, and you can see prices kind of shot up. Now, this isn't as of today. This was as of last week. And so the concern would be if we do see an escalation in pricing as a result of any kind of constriction on supply, then that would kind of signal to the market that there's going to be inflation. So we're going to keep an eye on this. Hopefully with the peace talks, that's not going to be the case, and we can continue to see some of this trending in the right direction. So as long as we continue to see inflation numbers come down, then we should continue to see this move up and mortgage rates benefit as a result. All right. Stay tuned for next week. Thanks so much.